Okay, welcome to my YouTube channel. Please like, share, and subscribe. So let's start from what happened this week, Monday, being 15th of September. So look at Monday. Let's go to 4 hour. And look 4 hour. Market on daily, the market came down, broke structure. Now went for the take out this buy side liquidity. It's all-time high. So let's look at what happened on Monday, being 15th of 2025. So let's check. Let's see what happened. So this is on 4 hour. So the market came down during Sunday, then came down on Monday, taking away the Sunday's low, then entering into this fair value gap, this 4 hour fair value gap. Let me find it. This 4 hour fair value gap. This 4 hour fair value gap. So the market came and entered this 4 hour fair value gap FEG. Okay, so it entered, didn't close the equilibrium, just it touched the midpoint, not nearly the midpoint, but it touched the midpoint, then rallied up. This on 4 hour. So let's go to the 15 minutes, but let's start from 1 hour. Let's see what happened. Let's listen to 15 minutes. Okay. The best tracking I liked, normally like to trade is 15 minutes. So let me show you guys what happened on Monday. Hey, look at it. So Monday the market opened. Let's expand the chart. So okay. Okay, the market opened here. The market opened. Okay, let's close. Not this one necessarily. Let's use this one. The market opened on Monday. Opened on Monday. The market normally opens on Sunday evening, but I like using Monday for the entrance. So the market opened on Monday, then trade up, then went down. The time the market went down and took out the sell side liquidity was on. Okay, look at the sell side was taking. The sell side was taking. So the market opened on Monday, went up, came down, and took out the sell side, the buy and the sell side of the Asian. So it took out the Asian low, then rallied up. The time it rallied up was 6 a.m. Then during 6 a.m. it rallied up to create the high of the week, but it created the low of the week on Monday necessarily. Then it rallied up. So how will you enter if you are in this market? Let's go down to 5 minutes. That's where you do your normal entry in the 5 minutes. That's part of that's where you do it. Obviously, sorry, my mind. So we're here on 5 minutes. So here, this is where you enter your trade. So you normally enter your trade in these 5 minutes. So look at what the market did. Let's expand. Let's show you how you enter the market if you're trading with. So first of all, you have to get your daily buyers, which is on. You do that mainly on the daily candle. So the market created a low during the Asian section, and the market opened by 12 midnight, and the market came down, took away the sell side. The sell side was liquidity. So how will you enter this market if you are in Monday? If you traded on Monday, which is the 15th of September, so look at the market came, took out the sell side, created a high, then went down, didn't close in the midpoint of the candle. Let me show you. You normally treat candle as weak and weakest candle. So let me show you what happened there. This is the 5 minutes. You just have in mind that we are in the 5 minutes. So look at here. So the 50% of this week. Let me show you. So actually which week? Look at it here. So I use my Fibonacci, then draw it down. So the 50% of this week, the market didn't close it. Let me edit it small, just do some smooth. So the market entered and traded to the 50% of the week. Then it rallied upwards higher. Do you understand? So it's rallied higher. So showing that they are not willing to go down. So the market somehow traded off, came and created a lower low, then traded high, then came and entered the breaker block. Look at the breaker block. Let me delete this thing. Look at the breaker block. The market came and entered the breaker block. Look at it. Look at this breaker block. Let me show you. Not this one. This one is the large one, but this is the small one. Are you seeing it? Oh, wait, I'm coming. Yeah, are you seeing the breaker block? Let me change the color. Are you seeing the red breaker block? Let me change the color a little bit. Okay, just let's leave it. So the market came and entered this breaker block. This one, this particular one. So the market entered this breaker block, then trade up higher. So it created this breaker block, took away this sell side, this small little sell side. Let me show you guys. So it took away this small little sell side. So there's a perfect entry. Then you aim here as a target. This place will be your target. So before 9:30, you are almost done from the market. This here will be your target. This place will be over time. Let me change the color. This place will be your target. So the market came, took away. Let's okay. The market rallied up, came and took out the sell side liquidity, then entered into the week of the 5 minutes, then traded up, came down, created a lower high, then rallied up a little bit, then it rallied up, then came in and entered this uh, breaker block, then rallied up higher. So aiming for this was the high of this candle, this 24 2415 as the high of the as your target. Just look at this here. Look at here when I'm pointing in the candle. So it traded up to 2415 as the 24,159.50 as the high of the candle. So you use that as your target. This is what market did on Monday. So it came out, created high, high, low. Then this is a break of structure. So this is a break of structure. This is a break of structure. Like this is a break of structure. So the market came. Let me delete this thing so you guys can see what I'm saying. So this is a break of structure. So the market came, created a low, then created a high, then it rallied upwards higher. So this is what the market did on Monday. On Monday, beginning the 15th of September. So we rallied up higher as here, using here as a target. So let's go down to the 1 minute time frame. There you will see clearly what I'm saying, what I'm talking about. That's where you see what I'm saying. Just in 5 minutes. So let me see this. Okay, we're just in there. And still in. So this is some of the things you have to understand while trading the forex market. You must know the buy side, sell side, the break of structure, the spread of liquidity. So during this course outlines, we'll be talking deep. We'll go deep into each of the subjects, like the breaker block, the order block, the fair value gap, the fair value gap. We'll go deep in each one of them. We will narrate them, show you how to trade them, what's the worst case scenario, what can happen, and during the trade, what can you do to navigate the market. So you must learn how to navigate the market. This is one of the surest way to know if you are a good trader. I'm still on Wednesday. Do you understand? So this is one of the things you must know as a forex trader, how to navigate the market. Where I'm coming down on the farm, be the AC. So pardon me, you guys will be hearing some noise in the background. Let me just wait. I'm coming. So, okay, now we're back. So where were we? So let me finish up this lesson. So now we are in the spirit of the game. We are in the spirit of the game. So okay, look at what happened. So it came down and took away the sell side, then rallied upward higher. If this is your first time in this channel, just calm down. You understand what I'm saying. So just relax. Understand what I'm saying. So look at what the market did. So it came down. Watch. So it came down, took away the sell side, then went up higher, then rallied down and took away the sell side, then break a structure. This they call it was break of structure. It created, it took away this high, then created break of structure, then went down again. It didn't necessarily this SME SME SMT divergence. If you go to Nasdaq what's it called again? S&P 500. You see the SMT divergence. So it went up, then created a low, taking out this low inducement. They call it inducement because it created a low, then came down and took it out inside this. We are still in this structure. So it came and created did an induced scan, then went up and rallied up higher. So here will be your entry. So you enter here, or you can use the 50% of it. But anyway, you enter here, then it created another inducement, went up higher. So went up higher. Let me delete this thing. This is what the market did to just on Monday. So it rallied up, enter, rallied up. So let's see what happened during the 8:30. 8:30. So 8:30 is London open, like they have two times opening price, 8:30 and 12 midnight. So the market opened during the 8:30, then went down and took away the lows, the London lows, then took away the lows, then rallied up higher. And this, look at 8:30 there, is it here? Is it? Then rallied up what higher. Then during 9:30, look at what happened in 9:30. So the market came down by 9:30 and entered, then rallied upwards higher. So opening price 8:30 is one of the opening price, 12 midnight is one of the opening price. So when trading for forex, you must be when trading forex and indices, you must mark the 8:30 and 12:30 and 12 p.m. so you'll be safe. Okay, this is one of the things you work you watch at while trading the forex markets. Oh God, it's still a zombie.